Welcome to Break Away from the Rat Race, a podcast series to awaken your entrepreneurial spirit and help you achieve financial freedom. On our show, you'll learn about investments and how to create passive income. Let's get started with your host, Eric Martel.
Welcome to another episode of Break Away from the Rat Race. And today I want to share something a little bit personal. It's not too personal, but it's really about the equity in our home. And I'm going to speak for our home, obviously, and then you can look at yours. But my goal, as you know, has been to build passive income. And then part of that quest, I would say, has been to, it requires some capitals, and then you want to maximize the return of that capital. So we focus a lot in terms of on cash return or return on equity on our investment, and so this is something that's paramount to us in order to build a business, to build our portfolio of passive income. So when we look at that, and we look at the numbers, and we look at all our properties the same way, and often, I mean, the home is also something that you should look at. If you have a significant amount of equity that is locked in your home, you have to find a way to unlock that equity if you can make better returns. So you want to always maximize the use or the return on your equity at all times. So this is what your sole job should be. You want to have your capital and your equity work for you. You know, you've worked all these years to build capital and work for your money. Now it's time for your money to work for you, and this is what we're trying to do. We're trying to switch this around and really leverage that equity and that money to build passive income for you and really get to work. So different ways of, obviously, if you have a home, different ways of leveraging that equity. One of them is mortgage. You know, this is the primary one that everybody is used to. Then there's a line of credit, which is also another one that is excellent for investment. We have some investors who are working with us, and they're using their line of credit to invest with us. And this is it, right? And this is what happened with our own home. Then you have to look at the rest of your equity. And we did the mortgage, we have the line of credit, and we basically maxed out on these two items. And our house value has increased significantly over the years, and what we end up with is that when we look at the mortgage and the line of credit, we're about at 50%. It's actually less than 50% of loan to value. So we have like more than 50% of equity that is stuck in this property, that is locked in, that if we want to go and access it, we have to, we couldn't get a bigger line of credit, so we would have to refinance the whole house. So pay the line of credit, pay the mortgage, and redo a first mortgage for that. And obviously there's costs associated with that, which is fine over 30 years. It doesn't make a big difference. But that means that we would have to kind of like start from the beginning in terms of mortgage. We would have to obviously increase the amount of the mortgage, which is what our goal was, to unlock our equity, and then our payment would be higher as well. So, but when we looked at refinancing the house, really we would move from we would get up to 75% of loan to value ratio potentially, but But the difference between where we are now and where with the 75% was really not that much. There was still another 25% of loan to value that was locked into the property. And actually, I think we were not able to get to 75% without getting into the jumbo loan. So we didn't want to go into a jumbo loan where the interest rate is higher and all of that. So we wanted to stay. So even at that point, their loan to value we would not be able to reach 75%. Some other areas of the country, yes, you would be able to go and go and bump it up all the way to 75%, and it may make sense in your area. But around here, The property values around here, they tend to be quite high, and that means that you get into the jumbo loan category very quickly, and then that means that you get like higher interest and all of that and higher fees to get into that category. So basically the refinance idea, when we looked at that, it made sense a little bit, but really it for the effort and then the cost, it ended up not making any sense, especially when we looked at the amount of money, that equity that we'd be able to unlock from that transaction, and then how we would reinvest that. It was good, but it was not the ultimate way to leverage that equity. So we looked at other alternatives, and really what it came down to is sell our home. And so not an easy decision to make, but it is a decision that is available. And and the key here is really to focus on your goals. And then our goal, again, passive income, maximize having our money work for us. This is key, and really focus on the ultimate use of our capital and the most the highest return possible. And then basically all the other decisions kind of derived from that. And then so a home obviously is a little bit more emotional, right? So we have a lot of investment properties, and then selling one of these houses, we're not emotionally attached to these properties. Having your home that you lived in for 15 years, it's a little bit different, obviously, but you have to focus on your goals. What are your goals? And then sometimes you have to make tough decisions in order to achieve your goals. And so this is kind of a lesson for today, is that really look at your goals, look at the numbers, and then find the equity where it is, and then determine, is that the best use for that equity? So you have equity that's everywhere. You have equities in bank account that you don't use very much. You have equities in your 401k, in your IRA, in your all kinds of retirement accounts, sometimes in your stock market, all of that. You have money sometimes in all these different places that you could use, find a better use for, and obtain better returns. And this is what you need to figure out, is to really find that equity and then put it to good use. Have your money and your capital and your equity work for you. So that's the decision, or the lesson for the day. And after this, I'll give you a little tour of a house here. And so you can see, this is kind of interesting to kind of go through the house after you've lived here for so long, and after it's been staged, and then how it is different to see other people's furniture in the property. So the other question, okay, fine. So we sold the house, but then we're not in the streets, so we have to find another place to live. And then the question is going to be, so you have to buy another house, so you're going to be in the same situation. You're going to have to find a mortgage and all of that. But we are kind of in a transition for us. I mean, we're looking at, kind of moving out of this area anyway. We're looking at traveling more, and then kind of like changing a change in lifestyle. So I don't need to be in this expensive area anymore. So we're looking at potentially moving to another area. And so right now what we're doing, then we are renting another house. And so that's the plan here. And then when we compare the price of the rent of that other property, and we compare with the operating cost of this home, so the rent, the insurance, the taxes, the repairs, the rehab that we had to do and stuff like that, then we look at that, and then we compare that to the rent of the property. It is higher than just the mortgage payment that we have, and the taxes and stuff like that, but it's about 10% higher than maybe a little bit more, maybe like 10 to 20% higher than what we're paying here to operate this house. But with the equity that we're going to extract from the sale of this property, it will, and investing it the way that we've been investing it for a few years, and we know that we can achieve certain returns, we would be able to pay for, in a few months, we would be able to pay for the entire year of rent. Something that we would not be able to do if we were to leave the equity the way that it is and continue to pay our mortgage and our taxes and all that kind of stuff. So this is the advantage. Now, by leveraging this equity, the equity being invested will pay for the rent for the entire year after only a few months of investment. So we actually, at the end of the year, at the end of 12 months, we would have not only have covered the rent, but we would have obviously additional cash coming from the investment that we would do with the equity. So that's a good decision. You end up with, our operating expense then for the new house is basically zero, and we have positive cash flow, and we're building an asset that is we're using our asset at the maximum return. So we're pretty happy about that. And then so it is a tough decision, but if you're logical and you look at the numbers and you are focused on maximizing your return, you too will be able to look through these tough decisions and figure it out and find out what the correct answer is. So that's one thing, and so that kind of goes into the basic financial intelligence is how do we figure out, and I'm not going to go through this in this particular podcast, but in a future podcast we're going to talk a little bit more about financial intelligence and basic financial knowledge, really, and then things that you're not taught at school, and then you're supposed to figure out on your own. And so we're going to talk a little bit about that, so that what the cash on cash return is, and how to maximize, how to leverage, and all that kind of stuff, and what's the best use of your equity and your cash. So so that's all I had for today. Again, we're going to have the little tour of the house if you're interested in that. And then that's it. So come and see me at the next podcast, and we'll talk a little bit more about basic financial knowledge or financial intelligence, and then we'll take it from there. So thank you again for watching, and we'll talk to you later. Bye. Well, this is really happening. This is our house, what used to be our house, and this is not my furniture. This is staged for sale. A very big move that we're doing and recording that for posterity. We've been here for about 15 years. This is what they've done here. This was at one point our dining room, and then we changed that into a sitting area. But again, this is staged as a little sitting reading area. Then we have our dining room, which is very well done, with the chairs, very clean. And she really picked up the turquoise again from the cupboard, and the lamp, and the white and stuff like that, so very well done. And this is the dining room. Again, picking up the turquoise and white here, the turquoise and white here. And a nice big mirror on top of the fireplace. Looks very nice. And then going to the bathroom here. Again, very simply done here, but this is the hallway bathroom. Very clean. And then our master bedroom. right here. And this room looks very spacious. It feels very spacious. It's very nice. Little sitting area here. And a little frame here. And kind of like our master bath. And master bath here. Very clean. And a walk-in closet. Very well done. The other bedrooms are left empty. Leave it to their imagination. So another bedroom here. One here. Another one here. Very well done. Looks very good. Oh yeah, the other thing too, on the patio, there's a long chair with a nice cushion on it. So it's looks very inviting and relaxing right here. So yeah, looks very good.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.